Hi, my Bitcoin followers! Bitcoin's legality was always going to be a controversial conversation. How does a government approach a decentralized global digital asset that wasn't meant to be controlled by a centralized party or an organization? A new form of currency that's censorship-resistant and is community-focused. So, the question arises that, is Bitcoin legal? Well, in today's video, we are going to answer that. Without further ado, let's begin. As such, the United States government has had a hard time regulating Bitcoin. There are multiple layers to the world's first cryptocurrency that go past traditional investments, such as mining and trading. Each activity requires its own regulation, considering that most have a hard time finding out how Bitcoin works, how it is regulated, and how the profits can be taxed. This governmental struggle stretches throughout all parts of the crypto industry. For example, legal parties cannot allow unauthorized parties to manage crypto, much like how they can't allow just anyone to manage traditional fiat currencies. Regulators aim to establish new guidelines regarding businesses providing crypto custody or managing digital assets in other ways. This task is further complicated, as some assets are considered securities, while others are property. Then, there are also derivatives and other aspects of the investment process. Should profiting off an airdrop be taxed differently than an investment gain from cryptocurrency trading? Where do hard forks come into play? Do governments allow mining profits? How are they taxed? And how is the process monitored? Regulations may vary based simply on how mining works for each network, and if an entity is mining for personal or business reasons, even for their yearly income levels. Some companies might pay employees from earnings gained during mining as well, which would take various policies to regulate. There are so many types of revenue in crypto, most of which the traditional citizen has no understanding. In some ways, the technology is developing faster than mainstream crypto knowledge, and government regulations take time to understand and flesh out. Ultimately, there is also the globalization and freedom of movement aspect to take into account. Citizens can hold and earn crypto anywhere in the world, so how do governments tackle that? It's no wonder regulation is taking time. But here is an overview of how some of the countries around the world are looking to regulate cryptocurrencies. Securities and Exchange Commission. The SEC has been discussing Bitcoin since 2014, a year in which it released an investor alert warning citizens of Bitcoin risks. Those risks include potential fraud, volatility, and scams. In 2018, the then head of the SEC, Jay Clayton, went on the record classifying Bitcoin as a property and not a security, and that it should be taxed as such. While most cryptocurrencies are considered securities, Bitcoin isn't, as there are no benefiting parties behind the investment contract. Instead, the network is anonymous and Bitcoin is considered by the SEC as more of a traditional currency like the US dollar. In fact, Clayton also claimed cryptocurrencies are replacements for sovereign currency. Replace the dollar, the euro, the yen, which contributes to his final decision. Otherwise, the SEC regulation tends to focus on initial coin offering, ICOs, as those are more similar to tech startups raising capital. As for the regulation surrounding Bitcoin, other groups have more to say about it. Internal Revenue Service. In 2014, the IRS released Notice 2014-21, which classified Bitcoin as a property. This means that investors must pay capital gains tax on every cryptocurrency transaction and report it to the IRS in USD every year. Such a policy includes profits from Bitcoin mining and payments for goods and services, among other activities. It wasn't until 2020 that the IRS added an official ticker on Form 2020 that requires taxpayers to disclose any virtual currency activity. While many Bitcoin traders use the asset's decentralized status to avoid taxes, the IRS formed a task force to hunt such evaders in 2018. Commodity Futures Trading Commission. The CFTC views Bitcoin as a commodity similar to gold and other precious metals. In 2017, the Commission released a primer defining their views for clarity's sake. Moreover, the group's power over derivatives will eventually cover insider trading, pump and dumps, and similar activities as it learns about the industry. Institutional investors waiting to get involved with cryptocurrency may find the CFTC quite appealing. After all, the Commission released an official 2020 to 2024 strategic plan targeting Bitcoin and other cryptocurrencies. The plan focuses specifically on clear crypto regulations for all Americans, while still encouraging innovation in the space. That said, it plans on being tough to those who break the rules. The CFTC has honored its word as well, going after the BitMEX exchange, stating that it failed to register the platform. Many crypto enthusiasts are excited, as regulation could mean an eventual Bitcoin Exchange Trade Fund (ETF), something the SEC has been unwilling to implement for some time. If you are enjoying the video, then make sure to hit the like button and subscribe to the channel for more interesting videos about Bitcoin. Financial Crime Enforcement Network. FinCEN established its guidance in 2013, stating that while the virtual currency is a medium of exchange, it doesn't have all the attributes of actual currency, meaning it isn't considered legal tender. That said, they state that as long as a client is willing to accept it, anyone can use Bitcoin to buy goods and services. Also, it's important to note that those who use cryptocurrencies to buy goods and services are not considered a money services business, meaning they fall under different regulatory policies than a traditional business. Federal Reserve. In March 2021, Federal Reserve Chairman Jerome Powell stated that Bitcoin is more of a speculative asset closer to gold than a currency or store of value. Powell also claimed that Bitcoin isn't a particularly useful store of value due to its volatility, hence the speculative moniker. In fact, the Federal Reserve has often gone on record declaring the risks of Bitcoin and other digital assets, recommending that citizens do not invest in them. Randall K. Quarles, a key chair on the Federal Reserve's Board of Governors, has gone so far as to exclaim that Bitcoin will never be a revolutionary means of payment. However, and somewhat ironically, the Federal Reserve plans to continue developing its own digital currency, which will likely resemble more of a stablecoin. Financial Industry Regulatory Authority. FINRA requires cryptocurrency brokers to have a certification to deal with such securities like Bitcoin. If, say, a so-called cryptocurrency broker provides some wrong information, FINRA can provide a lawyer to help. If that broker is unlicensed, they're going to have a hard time continuing their practice and will probably have to go out of business. Otherwise, FINRA does its best to educate citizens on the risks of cryptocurrencies, providing information podcasts and guides regarding digital assets. So guys, let me know down in the comment section below, did you think Bitcoin is going to be the future currency of the world? For more interesting content, give this video a thumbs up and don't forget to subscribe to the channel for more awesome and interesting videos related to Bitcoin. Have a nice day, and I will see you in the next video.